Hey traders, Sunday coming at you guys. I want to just do a top down like we do. I try to do this every week. Usually I'll do it Sundays, if not Friday, um, before I start the weekend. But just do a top down global macro. It helps me figure out it just helps me visualize where the different markets are. And I like to do it from top down, monthly level down to the smaller time frames. But also, guys, real quick, it came to my attention that the last video I did, um, I guess I don't know what I did wrong. I cut off the right hand side of this chart, so I was showing one of my traders trades that he sent over or from this last week, and I just wanted to highlight, guys, this consistency. I talked about. I mean, you don't really see me talk a lot about, oh, I made this much money or that much money. For me, I think the best thing to show anyone that's new to the team or that's interested in joining us is not the results that I've had. Um, but hey, can I teach you? Hey, is this model and is this process duplicatable? Because at the end of the day, you call up somebody. I used to talk about this on the institution side. It does me no good to call a prospective client when I was teaching them or showing them our directional model, and I would trade with different heads of the desk of the primary dealers or this hedge fund or that hedge fund. You don't call them and tell them, hey, look, this is how much money I made last month. Oh, I did 40,000, 50,000 last month. I just had a $50,000 day yesterday. We were having a good run here in the long bond. That's not impressive to people. I mean, it's all relative. Some guys make $1 million in a day. Some make $100 million in a year. They only care about the process. Is it duplicatable? Do you even have a model? So, guys, look at all these different pairs. All right, this isn't just, hey, the euro was really ripping and we've been long euros. This is trading, multiple forex pairs on multiple time frames, and look at this consistency. This is a small account because there's a new trader to my model, right? But this is just outstanding, guys. We had the same results with another one of my good friends now and trader. He came in his first week in trading, he's up in Canada. You couldn't believe he had like 2 losing trades out of 30. So I've done videos showing that same thing. Anyway, it came to my attention that I had cut off the right hand side, so I just wanted to show that again since I screwed it up Friday. Alright, so let's just get into some of the markets here. Obviously, we trade a lot of Forex. You start with the dollar, you get the dollar right, you're going to get a lot of other things right in global macro. So I keep saying when we go to the monthly level, I was just thinking about this today at the beach, this monthly cycle continues to come down, and it's been a very patient, it's all year this cycle has been moving lower. If you guys can see here, okay, it's subtle, but we started the year and it's been in a downtrend, the dollar, right? What did I just do? Real simple. This stochastic on the settings that we like, done nothing but going down. And now I think we're close to the point where we're going to get another higher low. I know I've been saying that for weeks, but I've also been saying that we still have to let this come down. It's pretty rare for the dollar to stay at these levels before it has a meaningful multi-month rally. Okay, when we turned up here, look at the result. Boom. That was the start of the new uptrend long term. We cross here. Dollar went sideways, but still didn't really gain any ground, right? Until we crossed right here. And then what did we have? Another move up on the dollar. Crossed again at the beginning of 2016. Look at price action. Cycled into the lows. Cross here halfway through 2016. I mean, yeah, so many times, even I would use a stochastic and not really understand it. I was using it as overbought, oversold. That's not what I teach you guys. This is about a rhythm. These are cyclical rhythms that it's measuring. It's the time component. So we cycled up, and then we've been in this down cycle. So until that changes, which I think we're probably going to get it, maybe it's this month, maybe it's more like August, September. But I expect to see, I don't know, maybe we come all the way back down to these lows at 92 on the dollar index. But it's very rare for this cycle to be this low for this long without another counter move back the other way. So we're being patient, we're keeping that in the back of our minds. And then when you go to something like the euro, which is the inverse of that, again, we've been core long the euro, which is the complete opposite of where we've been for the last 4 years, which is 95% of the time has been on the short side. But this is part of it. We have this monthly cycle that we're still in this up cycle. So is it high? Yes. Has it crossed? No. So if you're playing a core short, you're early. We were being a little bit more tactical once we moved through 113. But don't get me wrong, I'm a huge bear on the euro and the eurozone overall. So when the timing's right, we'll be back on the short side of the euro in a more meaningful way. I'll just say on the daily level, this November high was very meaningful. Okay, this is the Trump highs right here. And then we had the French election highs right here. So once we went through that, we played along, pretty tactical, meaning there was places where we were playing short here, but once we got above this high, it was time to flip and go long, and I said, well, let's look for a move back to 113, and that's what we got. Then when we got to 113, the risk reward is to flip and go short. Made a little bit in here, but also ended up stopping and going long. So we've been playing this from a core long as we've been above this 113 area, if you guys can see that. We actually had to move up and then pulled back to 113, which we called right into the 4th of July, in and out of the 4th of July holiday. Let me zoom in. And that was just very technical. Nothing to do with the cycle. It's just a matter of getting above 113, rally, pull back. You're supposed to be a buyer. And we've yet to really have that follow through. So there's some major resistance on the euro up here. 115 to really 117. And again, as the longer term cycle rolls over, there's going to be opportunity to start leaning back contrarian short. But we're using 113 as an area where we'll flip and go short if and when that level breaks, if and when the weekly cycles line up, and of course the monthly cycles as well. So we probably need to see where we're going to close July. So anyway, that's going to dominate a lot of our forex trading. I'll just touch on the yen real quick. We had, like I said on Friday, some nice comeback trading on pound yen Thursday and Friday. So proud of you guys. I think the yen overall still has room to weaken. We've had a good move up though since we went through this pivot at 143. This is a BCI in our model, so maybe that marks halfway of the move. But we're still holding the 8, so I'd still rather be a better buyer of Dragon. And then of course Euro Yen's been even more bullish. The call there has been that we got through these highs right here, and then took this high out, and there was just nothing until this 200 on the weekly level, which is 130.70. So we're pretty much right there. It's the same story. Strong uptrend, but it could definitely continue. So we still want to be better buyers on Euro Yen. If we look at dollar yen, not as bullish as Euro Yen, and I would say pound yen a little bit more bullish also. But obviously the dollar yen has this problem here, all these highs. Not to mention that some of the longer term cycles are high. So I wouldn't chase longs, guys, until you really clear 115.5. This is just this is making higher highs. This is still making equidistant highs. So this is more of a range trade. But anyway, guys, that's probably enough for this video. We'll go through some more markets in the morning, and enjoy the rest of your evening, and chat with you guys in the AM.